Hi, this is Ron Janish, and in this particular video here, we're going to show you how I use the course methods for intraday trading. Okay, we're going to show you the logic behind it and all that easy kind of stuff. Okay, now, first of all, let's give you a little recap. Today is Tuesday. It's the 11:22, and right now we're talking that the market has been open, maybe 40 minutes. All right. Before the market opened up, I did an analysis, and I even wrote up my analysis on someplace that you really can't go and change much. Here we go, detailed forecast on CNN with chart. Here we go. So this is what I was looking at. Okay, I was effectively, I said, hey guys, market stalled by ORE. This morning the market was going up until it reached the ORE value and then promptly reversed. A few hours later the GDP numbers came out and traders started the selling rampage. At this time prices appear to be heading past the H line that is over 3% below current values. Somewhere below the H line is an ORE point which typically provides astute traders with a reason to buy. In other words, hey guys, the world is not ending anytime soon, you know? As always, comments here are a wild guess unless it is stated as a precision trader forecast. And we always tell you everything is a wild guess pretty much. But then again, our wild guesses are better than other people's forecasts, you know? So anyway, down here is where the H is coming in, and I'll show you that in a little bit. And here is where prices were before the market opened up. Okay. Now, it says here posted 1 hour ago. Wow. Okay. So that's where we are. So let me tell you what happened. Okay, first of all, before I tell you what happened, let me tell you about risk. Now, you can read all the legal mumbo jumbo about risk, and chances are it's so boilerplate you're going to get bored shitless. So this is the truth about risk. When you trade futures, you are not only at risk for all the money in your account, but you're at risk for everything in the universe. And I'm not kidding. Look at this MBH or whatever it is company where these people had futures accounts. MF Global, ooh, they're real MFs. They had futures accounts, and whatever position they had, they now get to be in that position. So in other words, if they're long and the market goes down, too bad. And if they're short and the market goes down, too bad. And I'll tell you why it's too bad. Because in their particular situation, they're probably never going to see their money anyway, even if it makes a profit. Now, if it loses money, oh well, then they get to pay. Okay, but that's worst case. Let me tell you second to worst case. Okay, so let's say the market's over here somewhere, and you've got to stop here feeling pretty safe, like I do. Okay, I'm going to have a stop up here, and I'll show you why in a second. And I'm feeling pretty safe. I'm going to tell you why that's unsafe. Let's say Obama decides he's going to have a news conference today, and he's going to get up there in his pretty smiley face and tell you about how wonderful the economy is doing, which of course we know isn't exactly true. But suppose he then has a gas attack and his bowels start crunching, and so he's there telling you about how wonderful the economy is doing, and then all of a sudden he starts looking down and he starts mumbling, and the reporters in the back of the room that are immediately going to get on the horn, and within no time at all, the market will be down 5%. Okay? This is your real risk. Okay? So if you're working in the futures market, you're at risk for more than everything you own. You need to know that. Okay? That's just the way it is. Well, you could be at risk for more than everything you own. Depends on the size of your position. But okay, so anyway, having said that, giving you a realistic, risk assessment, you're also at risk for Obama's gas attacks. Okay, and or Andrea Merkel keeling over or something. But anyway, here's what I did this morning, in spite of knowing all that risk. Okay, so I look at the market this morning, and first of all, I get an ORE line in up here. Remember I had an ORE line up here? Now, the reason I like seeing the ORE lines is because typically after an ORE line, a correction is over. And if a correction is over and an advancement move is going to continue, then I will see at least 5 waves down, or 5 waves further. So we go 1, 2, 3, 4, 5, 6, 7. Okay, so then we go up here, and now we'll go 1, 2, 3, 4, 5. And my next area of interest is something called the H line down here. Okay, and if and if you're like most people, you'll just draw your pretty little pitchforks, and one of those lines is called an H line, and that's the parallel line, not the line in the middle. It's the line on the side, and it's the H line, and prices will typically go below this H line here. Okay, so what happened was prices were down here when I put up the forecast, right? So what I did was I waited until prices, started going up again. After all, I don't want to give away the store. I want to, give them a little time to recuperate. And just for demonstration purposes, I actually put on a trade this morning. Whoop-de-doo. Actually, 2 of them. And here's where I did it. And I did it at 193. Okay. Now, why would I go short at a value of 193? I'm sorry, 1192. It says that, but it's really 1193. Okay, why? Well, let's take a look. First of all, let me say this. Anybody who has taken the course from me, if looking at this chart here, just this much data here, you can't find at least 5 or 6 reasons why I went short here. Even if you don't know what the ORE indicator is, you need to pick up the manual. This is not rocket science, folks. Okay? It really isn't. Okay, so, first of all, you had a pretty little 3P line here. You had just a whole bunch of other really cute stuff coming in here, and you had the ORE. Now, the ORE is only for the people who are members of the soon-to-be 100 only people on the planet who have the advanced expanded course. There's a regular advanced course, which is excellent, and there's the expanded course, which consists of a ridiculous amount of information and the ORE technique, and several videos to make that ridiculous information more meaningful to you. Okay, and so these are videos that I made and these give you my understanding of what Andrew said and how I make sense of it. Okay, and so this ORE technique, anyway, this is telling me it's down we go, and my target's down here. Now, so I went short around 193. Now let's take a look at the logic of that. If I went short around 193, the high was 194.50 here, so I didn't get the high. Oh well, I don't get the high tick every time. That's the way it goes, guys. Okay, so I went short around here. Okay, where did I go short? Right about there. Okay, so I went short about there. Okay, now, so my risk is from here to here and a little bit beyond. Okay, so let's say my risk is 7 points. Okay, so my risk is 7 points. Okay, and what's my target? What am I looking to get out of this? I am looking for prices to go past the H. So where is this H value thing? Well, this H value thing is down here, and this H value thing is 1163. So you take 93 minus 63 and you get 30. And so you have 7 is the risk and 30 is, or more, is the reward. Okay, now that's a little better than 4 to 1. Okay, and what I'm really going for is probably closer to 5 or 6 to 1, guys. So, but let's just say I'm 4 to 1. Okay, now 4 to 1, that's a decent ratio. Okay, so I'm looking to get $4 back for every dollar I'm risking. Okay, that's what I'm doing. So that's the long. Well, the other part here's the other part that you don't see is the daily chart, and like we're looking for one of the things that you do when you take the course is you learn to analyze things on different levels. So you're looking at it in terms of what the weekly says, what the daily says, and then what the hourly says, right? You want to look at it at three different time frames. I mean, this is otherwise this instantly throw shit against the wall stuff just really is not a good way to make money. It's a good way to lose money, right? So you really want to take your time. Hey, take a look at it. What the hell? Hey, you'll either spend the time doing the analysis ahead of time, an extra 5-10 minutes after you get used to it, or you'll spend the time, probably 10 times as much, worrying about how much money you lost if you don't. So take the time, do the analysis. What a deal. Anyway, this is what I have right now. This is what I'm looking at. And so, prices are bopping up and down and up and down and things like that. And I am fully on the way to my target area down here. I am fully expecting prices to bob and weave. I am not looking for them to go straight down. It might even take a day or two. Heck, for all I know, this area here might not get hit until tomorrow morning. This could happen. Anyway, I do invite you at this time to take the Andrews course while it is still available. And I want to stress that, while it is still available, because we are in the process of building a consulting firm that will wind up doing things such the result of which will be that we won't be making this available anymore after a while. It just won't make sense. Okay, it would be counterproductive. So while this is still available, it's not expensive. The more expensive one is the expanded course, which includes the ORE technique and more material than you'll ever need to get yourself to sleep. And that is limited to 100 copies. So, and then if you want to see more about our future of software and other interesting stuff, it's all available here. Come and see. Take a look at precisiontrader.com. Take a look at andrewscourse.com. We'll see you there. If you've got questions, here's the phone number. Give me a call. I will talk to you personally. I will answer questions. All right? I thank you for your time today. Bye-bye.